Hey everybody, this is John. Welcome to the free video. And what I wanted to focus on today is kind of taking a look at the weekly chart of the S&Ps back in 2008. All right. So in October of 2008, this was the equivalent of our December 2018. And just notice what happened after that. And after that, we essentially traded in a range for most of that time. Okay. After that, we had a range for the next, October, November, December, 4 odd months here, where except for that one little dip here, we traded in a fairly narrow range, okay, before another puke down, and then we had a hard bottom, all right, and then we rallied. And so the question is what are some of the key things that happened around this? Well, first of all, in terms of price, something like this, it gets rid of a lot of players. Okay, that just anybody that has weak hands, they're done. And then on something like this, you're looking for major timing. Okay, now while that's all happening, a lot of us, it's like, well, I don't want to sit here and wait for the weekly chart to get timing. What about what's going on a daily chart? Okay, or what's going on a 5-minute chart? Can I play those ebbs and flows while waiting for quote unquote the hard bottom, or as they say in Boston, the hard bottom? Okay. So, the point of all this is that there's a lot of things, we've had some bad news coming on, and if we go over here and we look at where we are right now on a weekly chart, you can see that, again, this looks a lot like October of 2008, right? And now what's happening is that I'm expecting months of pretty violent moves in between this zone here with some prods below. And then based on what's going on in the bond market, okay, so let's go over here to the bond market. We can see that the bond market has exploded here just because the bond market is telling Powell, like, hey, heads up, the economy is slowing here and you're going to screw everything up. So hopefully he's looking at that. We'll find out tomorrow when he has his press conference at 10:15. But what I want you to notice here is that if we go back here to 2008, you can see that a lot of 2008, the bonds here were flight to safety, flight to safety, flight to safety, and then boom, you had this explosion, okay? And this explosion was here in October of 2008, right? October of 2008, and then basically we had a stock market bottom here 3 or 4 months later, well, in March 2009. So the same thing is playing out now. In this case, the bond market exploding higher is essentially helping to forecast when the stock market will bottom out. So just kind of keep that in mind. This kind of plays out like clockwork. We can see right now that the bond market hasn't had, of course, nearly the same rally here, but it's in terms of magnitude, it's actually pretty good. I mean, this was about a 10, 12-point rally. And then if we go back here to the big rally here in 2008, this was a, certainly bigger point-wise. We're talking about 90 to 112, so more of about a 22-point rally. But in terms of, where it was priced then and where we're priced now, or the calamity that was involved in 2008 is different than what it is now. This is a big move. This is the biggest up move, consistent up move we've seen in the bond market since this spike here in the middle of 2016. All right, so just kind of keep that in mind for timing. And so the key here is whether you're looking for big timing levels on a weekly chart or even on a 5-minute chart, you've got to know 3 different things to time any market that you're trading with precision. And here's what they are. So really what this comes down to is learning how to time this stuff. There's all these kind of crazy things going on. And there's a lot of different things I like to use, in terms of levels. You guys know the levels that I like to watch. A lot of it's voodoo lines you guys are familiar with. And then also basic Fibonacci levels and then fib clusters. So that's kind of basic, levels 101. But from there is symmetry. Okay, you gotta, if I can spell that right, so I know there's only one T. And then timing. And if you guys haven't heard of the concept of Fibonacci-based timing signals, this is where we're looking for a lot of the reversals to come into play, whether it's on a 5-minute chart or, like a weekly chart. So Carolyn and I are gonna do this webinar together next Thursday, the 10th, 7 o'clock Central, free webinar. There's no, new indicators or anything like that. We're just talking about if you want to understand these precise setups for volatile markets, then you just need to know exactly when to pull the trigger. And if you want to be able to pull the trigger like that, it is a three-dimensional process. Okay? It is a three-dimensional process involving price, time, okay, and symmetry. And those three things come together. And price is kind of based also on some of the clusters and the levels and things like that. But once you have all three that line up, then and only then do you have a high probability reversal. If you're looking at this from a one-dimensional approach of just price, or a one-dimensional approach of just levels, okay, you're going to miss these. You're going to mistime them. But if you look at this from a three-dimensional approach and you understand that, it's going to help quite a bit. So what we'll be talking about is 5 proving setups designed to generate 300% to 500% returns. Okay, and the nice thing about this is with a smaller amount of risk than a normal, buy a call or buy a put. A quick and dirty way to find precise entry and exit prices, how to avoid getting run over by the market, the secret to super consistent options income in 2019, and how to hitch an easy ride on what's called institutional order flow. And the basis of this, again, is kind of getting a 3D understanding of price and time analysis so you can actually understand the market structure that's unfolding before you and be able to identify those high probability moments in time. Again, not just based on price, not just based on levels, but from that three-dimensional approach of when a reversal is likely to happen, and you can capitalize on that in a low-risk way. All right? It's going to be a lot of fun. simplertrading.com/time, free webinar, and we'll see you Thursday next week, January 10th at 7 o'clock Central. Have a good night.